Stellar's native token XLM closed at 0.2628 on June 1, 2026, after a 73.4% week-over-week rally that began on May 27 when DTCC announced plans to tokenize a portion of DTC-custodied assets on the Stellar network. This sudden price movement has drawn attention from traders and analysts alike. The key event was a May 27 announcement from DTCC, a custodian of $114 trillion in assets, stating its intention to tokenize a defined set of securities on Stellar. The news immediately triggered a sharp price increase in XLM, pushing it into the top 22.7% of its Binance-era closing values. However, closer inspection of the DTCC announcement reveals a more complex picture than what is being portrayed in mainstream crypto coverage. The DTCC story is not just about tokenization, it's also about the structural dynamics of retail price rallies and the potential for late buyers to be caught in a liquidity trap. The DTCC announcement itself outlines a planned integration that would make DTC-custodied securities available on Stellar in the first half of 2027. This is not a product launch today, nor is it a. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Guarantee of tokenization volume. The timeline is 12 to 14 months out, with no live product currently available. The headline figure of $114 trillion refers to DTC's total assets under custody, but the announcement does not specify how much, if any, of that will be tokenized. The SEC's December 2025 no-action letter allows tokenization of specific assets, including Russell 1000 components, major index ETFs, and U.S. Treasuries. This creates a legal framework, but it does not guarantee market adoption or token demand. The price movement in XLM has been driven by speculation and media framing, with many traders interpreting the DTCC news as a sign of institutional adoption. However, the market has priced in assumptions that are not yet supported by facts. The current XLM rally bears structural similarities to past retail-driven rallies on the same chart, where late buyers often face sharp reversals. The volatility has spiked to 249% annualized, far above the long-term average of 99%, indicating heightened speculative activity. This kind of volatility is not sustainable in the absence of fundamental product launches or tokenized assets hitting the market. The retail trap setup is evident in the timing and volume profile of the rally. The announcement came at a time when retail sentiment is already high, and the lack of concrete product details has allowed misinformation to spread rapidly. This has led to a self-fulfilling price movement where buyers are reacting to headlines, not to data. The next signal to watch is whether tokenization products from DTCC will be announced in the first half of 2027 as planned. If the integration moves forward, it could provide a real catalyst for XLM. If most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Not, or if tokenization remains limited in scope, the current price may face downward pressure. For now, the market is pricing in expectations that are not yet realized. The DTCC story is still in the early stages of a potentially long-term development, but the current price rally may be ahead of the actual product timeline. Traders should monitor upcoming DTCC updates and any regulatory developments that could impact the tokenization plan. Until then, the XLM rally remains speculative, and the structural setup suggests that late buyers may face a liquidity challenge.